Okay, welcome to this second segment of Module 9 on month-end trades. What we're looking at now is equity index month-end flows. Now notice this is specifically what we're looking at now. What the difference between the bonds and the equities, again, we're seeing a rebalancing of the books. So seeing a rebalancing of books by major funds. So the major funds, the pension funds, mutual funds, hedge funds, whatever it may be, they need to rebalance their books at the end of the month, whether it be for accounting purposes, whether it be for just, you know, either they can get out of some of their positions, get back into them at the beginning of the month, whatever it may be, they need to rebalance some of their books. So what we're seeing because of that phenomenon, we're seeing high order flow or lots of order flow. There's a lot of order flow in the market. And because there's a lot of order flow in the market, because it seems like it's almost like an unsaid rule at the end of the month, we're seeing a lot of this flow. A lot of, the reason why a lot of these funds are doing some of this at the end of the month is because there's a lot of liquidity. So at the end of the month, we're seeing a tremendous amount of liquidity. On the last day of the month, again, just to highlight this again, last day of month. And this is again during not really the last hour, but we're seeing last 10 minutes or so. Really depends, but it's usually in the last 5 to 10 minutes. I should say 10 minutes. And there's a lot of liquidity during that last 5 to 10 minutes of the trading day, the last trading day of the month. And so a lot of these funds can get in and out of positions with ease because, if we're doing traditionally 10 to 20,000 lots in those last 5 to 10 minutes on each and every day, on the last day of the month we could be doing 50,000, 60,000 contracts. It's a tremendous amount of liquidity, so they can get in and out of positions very, very quickly and easy. So again, we're looking for order flow type plays. Now notice the difference between the bonds, we're not specifically looking for buy side trade. In most cases, so I'll just make this clear, in most cases we're looking for sell side trades or order flow, so slash order flow. However, I will say it's less straightforward, I think, in the equities. It's not always a sell. Sometimes the order flow says it's a sell. We're looking mostly for a sell, but sometimes we get buy side opportunities as well. So this is where your price action skills really come into play. Can you spot whether it's going to be a sell or whether it's going to be a buy? We know in the last 5 to 10 minutes is going to be a tremendous amount of order flow to read. So, some guys just like to focus for the sell side trade. If it doesn't come about, they don't trade it. Some guys can make money both on sell and buy side. But again, like I said, this is all to do with experience. The more you see, the more you're going to start understanding how it, the implications of the market structure as well come into play. How, if the market's already tremendously bullish, do you really want to be, selling in the last 5 minutes? Sometimes not so much. If you were to be a seller anyway, and then you've got month end coming as well, then maybe your probabilities are in your favor. So this has a little bit to do with market structure, I'd say. Then the bond trades, tend to be, it's a buy side opportunity. This depends on the price action. So we've covered the bonds and the equities. The majority of this module, I'm actually just going to focus on practical examples because, the theory behind it is just this, really. I don't want to delve into it too much. The majority of this is on the order book. So we'll pay more attention to the actual practical examples and try and dig down a little bit more into each market and their character on the end of month. So thanks for listening and stay tuned.